So this is the range that it's kind of playing in right here. And if it breaks above that, you're looking for a break to the top. Breaks below, you look for a break to the bottom. If it decides to stay in here, then it's good wall country. So kind of correlate that over to the 1 minute, and I'd probably say that this is what we're looking for right here. Possibly. Let me widen this view up a little bit to see if that's right. Probably, this is probably what we're looking at. Right there, that range on the 1. So you got a slight trend down, but nothing that makes me think, nothing that makes me think that it's going to continue like a strong down. When you had this move up, and then it's kind of coming down off that move, and it could bounce where it hit the bottom right there and then go up, or it could keep this channel, down channel, and come all the way down and test the lows. So if it's going to turn, it's going to stay in this box for a minute before it either breaks out to the top. If it's going to continue to break down and touch this, it'll continue with this channel. So those are the two things I'm looking for: the break of the channel or the continuation of the channel. So if it's going to have continuation of the channel, I'd look for popping into some sells right here just for it to come down to here. So just a price cycle I'm looking for. So our action point on any layers is right here. Should we get a little pop-up? Just build into the layer. And then again, if it breaks above here, then over here on the 5, then that could be a change of market structure. And it could be that we got the bounce right here. So trading light until get confirmation, because it's only like 3 pips down before we get that action point, or 7 pips up, and continue to sell in to fix these layers if that's what it wants to do. What do you think? How's everybody else doing?
I'm leaning to sell right now, but I don't know.
Duke's pushing me, huh? Getting close, Duke. 2.92. Uh-oh, we're gonna have to do something about it.
Well, I'm awake now.
Oh, that wow. If you did that in your sleep, teach me. Teach everybody.
No, man, like on my other account, I disabled it, right? Because I wasn't awake.
Oh,
Clouded judgment. And then that really woke me up. So.
Oh, is that how you do it? You just put a bunch of trades and buys on one and a bunch of trades and sells on the other, and then you just wake up and the one that's up you trade. Risk out on the other and I kill it on one. Hey. That's why you need to have 2 accounts, multiple accounts. All right, here's our action point. Let's see if it kind of came down and stalled already, but I missed getting out of it. So we'll see if it comes back down and wants to test, and probably not. So we'll pop out of those guys. And we'll look for to recycle back in at the top of that candle. A little slow on that trigger point. should have got out and then got back in right there. Still waking up. You guys have to help me wake up in the mornings. It's your responsibility. If my trades are bad in the mornings because I'm sleeping like Duke, it's your guys' fault.
I don't know. It seems like Duke's got it figured out on how to wake up.
Yeah, just take a major loss.
I'd be awake.
That's true. So I'm toying around the idea of trading up OMC with y'all. What do you think? Should we do that?
Wow, that's a big one.
Yeah. I mean, the market's going to be mess until 1 o'clock today anyway.
Mm-hmm.
Yeah. I'll be here at my desk. I won't be actively trading, but I'll be here.
You won't be actively trading it? Why?
I'm not going to trade it live. I might do demo. I will, actually. I'll do demo.
The addiction set in.
I have to do
God, Douglas.
other Forex related activities. But I'll be here. I'll do demo. Because it will be a fun time. Sorry.
FOMC was actually one of my first strategies.
What was that? What strategy? Hope, pray, close your eyes and click.
I was actually part of the trading partner program a few years back, and one of the strategies was wait for the move, the break, and then you trade the 50% retracement.
Yeah. That's still my strategy on news. So like,
Yeah, I like that.
too.
You mean you trade back to 50%? You fade back to the 50% mark?
I don't fade it. So as soon as it comes back to the 50%, I would take it back in the direction of the break. If that makes sense.
Yes.
Yeah.
After it retraces 50%, you go in the same direction again. Right.
Well, what if it reverses 100%?
Well, yeah. Then you take
Yeah,
some
very well
drawdown.
could. Yeah.
Then you take a little drawdown. You have to look at some orange numbers for a few minutes.
Yeah, I guess I do a little differently. I fade the first breakout to 50%. Then if it goes beyond, it's going to retrace 100. If it stalls, then usually we'll flip back the other way.
That's cool. That's cool because that's exactly the kind of thing that I'm doing back testing on in general. So I'll see if I can get those numbers at a time. If I am on the ball.
What's your preliminary findings, or have you not started yet?
It's wonderful. It works. It's very, very hard to catch the initial lightning bolt because it just moves instantly and it's like the giant spread. You might remember saying that yesterday. Like the spread is really what kind of gets you. You can't get the entry you want.
Can't control the spread, yeah.
It's very, very easy to predict and understand, but to get in and get after the number, the spread goes like 30 pips, which means you have to move 30 pips before you even get to profit. It's kind of nutty. So, but the follow through afterwards is, it's very, very, very predictable or very, very reliable. And I'm trying to find out usually how far does it revert before it goes for the follow through, and then how long does the follow through last, and how far does it go? But
then you better
it's a great strategy. It's amazing, reliable. Getting up to 80% reliability. If
news is part of your back testing, and you should trade it, right?
Yeah. Oh yeah. So far, I've done like little small belt tests, just because I'm not trying to. You just need to test it for a micro lot just to see how it goes.
Mm-hmm.
Especially with that first lightning bolt move when one candle goes 80 pips. But the follow through is extremely, extremely reliable, and you can trade it extremely well. It's hard to say, because when you're wobbling, it's hard to guess. what the hit rate would be, but it looks extremely good.
Yeah, you can't take price action into consideration when you're dealing with news.
Yeah.
So, and then there are sometimes like the last news event, I think it was non-farm, we just traded together where it didn't do that. It just went straight in one direction forever. And then, but then,
the news was a big shock. So,
and then when it decided to come back, it did retrace 100%, but it wasn't like didn't retrace 100% in like one or two candles. It took like the next couple hours to get there.
So I remember there was like a super fast move. Then there's always like a cool down or a retracement. And then like you're saying the follow through didn't come fast enough, or it reverted.
It never came. It never
came.
You never faded.
It just went back to baseline.
Yeah. It was went around like, if I remember, it was something like 100 pips down.
Yeah, dang.
Something like that on the last non-farm.
Sometimes it turns out that the news is a shock, but not that relevant in the grand sense, because that's unemployment.
Right.
So the number was a surprise, and that kind of got everyone into a shock move. But upon reflection, it's not important enough news for like the guys around the mahogany table to move $100 million over. You know, scalpers will grab it and it'll be like a shock lightning bolt move, but the big institutions aren't going to move like $1 billion just because unemployment is slightly up or down. They're more focused on other inflation and the FOMC and stuff. Does that make sense?
Absolutely.
Yeah. In fact, in Europe, they only look at inflation. And then for the Fed, they have a dual mandate where they look at inflation and unemployment. But they don't look at unemployment all that much unless it's a crisis. So non-farm Friday can be like a jolt, but not always a follow-through. That's it.
Yeah. Since they're not today, we should see some movement though. Right? I mean, I don't know. What do you think on what is the idea on the interest rate? Are they going to keep it alone? Are they going to leave it alone? I haven't even looked.
They're going to go 0.5%.
Are they going
to the dovish number?
Okay.
If that, because they always have two numbers to pick from, so it's like an either or choice, and they can either go 0.5% or 0.75%, but they're probably going to go with just 0.5%. So it's like the dovish number they're going to pick, and that's fairly certain.
You know, Forex Factory says 0.5 to 4.5.
Yeah, 0.5%. There's a site called FedWatch that tells you like what the options are and what everyone thinks is going to happen, like the voting of experts and stuff. It's kind of useful to look at sometimes. It's by it shows like a graph of where they might go and how likely people think that is. Anyway, but yeah, some of those correlations get really tight, like 80% reliability or more.
Yeah.
Or more.
Sorry, I'm having a really hard day today. Just trying to stay awake.
Yeah. That's right.
So,
no sleep.
yeah. You want to trade for me, Duke? Just jump on. I'll give you controls. You can trade this account. And since, how's your other account going right now? No, if it's going good, you can't trade this one. Only if it's going bad. So I got this little setup right here. It could move higher. But if it comes down and tests again, it could break. And so because of this low right here, And so I'm like, this is my risk versus reward, ride the wave kind of setup right here. But if it comes down and just touches these, I'll peel those guys off because these are a better position. So these are my happy trades. These are my just, if it does break, I could have saw it kind of turn right there and touch the bottom. But I'm not going to stack any more cells on because if it does break up here, it could get a run up to the top. So I'd flip into some buys, waiting for the turn down, confirmation, build into some cells, then get out of everything right there. Maybe, depending on the action. But that's my predetermined move. Plan A comes down, tests again. Plan B is it breaks above here, get into some buys. Early on that candle. Who else trades with an A and a B plan? I like it. Music, theme music.
Sometimes I do it.
Sometimes.
Yeah.
Who does it most times?
I'm learning it now, but I think I'm a level half wobbler at this point.
What? Is that because you used to be and now your confidence is shaking, or because you're starting at 0 and you're raising to a half? Which one is it?
I traded with Duke last night and realized how much I don't know.
Ooh. Duke, are you?
That was not the intention. I was trying to help you.
Are you? Oh, I was like, are you damaging everybody psychologically?
No. He was super helpful. I'm just being hard on myself.
I'm just kidding. You're like, why did you do that? Man, they never trade like that, Nick. You are a level half.
You learn to process more information faster, and then, so a lot of this you pick up intuitively now. You know, it's like driving. When you first drive, you're like, "Oh my," super focused. And then after a while, you're just, right?
Yeah. Especially last night, the market wasn't moving at all. Luckily for me, the Jazz game was on, so I watched the Jazz game while I trade. Nothing better than just, having on one monitor and another monitor, and you don't have to really trade. Your focus is somewhere else. But it was just like a marching market all, like, I think it was like, I don't know, was it this stuff? It was going down for sure. So it might have been this stuff right here that I was just trading in and then just stacking into cells again. If it was right here last night, I just kept selling, wrong thing. I just kept selling, stacking into cells, and then I did exit here, but I ended up getting into like 5 lots here. But it was all like secured. And so I feel a little more confident going heavy if they're secured, 1, and then 2, if it's really slow. Like literally this move right here was only like 6 pips. Where I can manage that if it goes against me 1 or 2 pips, you can get out. But it felt like we were in a marching market, secured my trade, got it down, and picked up, like 2% right here on that move. And sometimes I'll do that if I see that happen. But that's exactly where I got out because I got out right before that big candle pop. And then the game was over, so I went to bed. think. Anyways, that's how I, regardless of the place, that's kind of how I played it. All right. So missed the opportunity to peel those guys off. So we'll see if the market gives me another shot. But this time, if it does give me another shot, it probably will break this down here. Kind of like the wick action that's coming in too.
All those wicks on the low side, on the 5 chart.
Yeah, those wicks right there. Those wicks I don't trust as much because it was a break lower than this support. So yeah, of course it's gonna pop up, right? So I like these wicks giving me a direction down to test again. But it's not enough to put any real stock in it. It's just I want it to go down, so I'm looking for anything to support it, but I'm also not, there's nothing really giving me confirmation yet. The confirmation has to come if it closes above here or here. That's where your confirmation comes.
Close and follow through.
Mm-hmm. So we're early on this candle, but if it does pop up, give me 2 pips, I might fade that, but it has to go up to here. On an early candle, I would fade it, but a late candle, yeah, I don't. Because usually an early candle turns into a wick like that, but just not enough meat on the bone there. All right, I got to get on some of this conversation here. It looks like it's good. You guys are having better conversation on chat than you are in live, huh? I like it. Either die a hero or live long enough to see yourself become a villain. I like it. Hold on, I gotta let my dog out. He's bugging me. He's begging me, I should say. Okay.
So,
I like that, Josh. The older I get, I think, wow.
So you have 32 lots. I mean, it's much easier to trade with the more leeway like that.
It's because I have a 5 to 50 account.
I still have 1 lot in my 5 to 50 account now.
You don't have a 5 to 50 account. Nobody does. So you have a challenge account. That's different. So this is a crew account. So the idea here, which is not, like yesterday I was talking a little bit about it in chat. The idea here is to give you guys access to multiple funded accounts. Not that you have to take them, but there's multiple different ways to get funded, right? So we'll see if we get this little pop. If not, I'm going to peel off these guys for a reposition trade. And see, kind of early in that candle. So, oh, that's the other thing, Duke. You mentioned yesterday about stalls versus wicks, all that kind of stuff. So do you ever look at the timer? If you're early, if you're north of 30 seconds or south of 30 seconds?
I
When
tried
you're-
to, but like just right now, I was in a buy. It popped up. I got out early because it was to me flickering, and then it touches the action point like I expected. But again,
that's the next evolution of looking at the stall is when in the candle does it touch that action point. So if it's early in the candle, like right now, you see it's touching this action point. If it's early in the candle and it stalls, chances are it's going to retrace. If it's late in the candle and it stalls, chances are it's going to break.
Yeah, exactly what happened. It touched early, like 10 seconds, and it dropped
Goes back.
Yep. But the point is, I got out at basically the same point is where it's at right now.
So I don't usually put a whole lot of stock in a candle until we're, less than 15 seconds. That gives me more information. Be anything, and so really anything north of 30 seconds, it does what it does, like right this second, right? So I don't put any stock in that move until it gets to the later part of the candle. So you got 50 seconds, and this could just turn into a big old wick if it comes all the way back down.
But what I see sometimes is it pulls back like 2 candles, but it doesn't break the body, and it continues, right? So it's like, oh, I got out. I was trying to recycle my trades, but it didn't move enough for me to really recycle. And basically, I was out of my position. I could only build up like maybe 1 or 2 extra when I could have had like a 10 runner, So when do you know, like, let's say it does close and it's pulling back, but it hasn't like reversed that.
So like here, what it's doing right now?
Well, right there, I would say it broke because it negated 3 candles.
Got it. But it broke but it didn't break this action point.
Right.
Right. But it did give you a reversal signal that it's going to come back up and touch this. Right. And if it's if this was like, I guess larger in size of movement, like this is kind of where I'm taking this and playing it on this move. That's why it has to break above this for it to get a reversal. Does that make sense?
Yes.
Because this one could be just an exhaustion bar for it to come down and do this. Now that doesn't mean that it's going to stay, but we're late in the candle. And so now I trust this candle to break because we're late. So that was a really, really good example of what I was just talking about, right? Like looking at if you're early or late in the candle. So I think, and then this one, I usually typically just fade back to 2 pips, back to this point, but it didn't give me 2 pips. I guess if you would have jumped in right there, you could have. But now that I missed that, I'm going to see if we don't get any continuation and turn it into a ride the wave. But now I go back to the 5 minute, and really the next action point is about 5 pips. 2 pips maybe right here, but if it goes past that, then could get another 5 pips off that move. So, but I think I might just pill these guys off for profit. Just because if it does break back into this, then those guys are not in a good position. But we'll see.
Right, then you can recycle those, right?
Yeah. But again, early in this candle right here. So I don't really put a whole lot of stock into it unless it does break down, decide to run and does not, and then late in the candle doesn't come back and touch that. So just wait and see what this candle does. This candle is like a confirmation that we're going to have a continuation of this run, or it could reverse on us and go back up. So this candle is an important thing to kind of watch. See, now we're late in the candle. And so If it fails to do either one, then it just pushes it to the next candle. If it fails to break above the green or below here, and kind of what it did, I don't really trust that as a break, but it's in the right direction. So I'm kind of like, okay, now it's really this candle that is past the baton to, so to speak. All right. Now because, just wait 1 second. I'm going to secure my trades here really quick. Probably want to secure them right here. I'm going to secure my trades right there on a pop-up. Just a little bit of a pop-up. I can put another layer on if it pops back up into here. Hold on 1 second. I'll let my dog in before he's a dog sickle. So this is kind of a typical move right here of what you'll see me, of what I'll do at night, because it moves this slow. And it kind of gets into what I call the Tokyo drift, where sometimes it just drifts in one direction, and you can just kind of ride the drift. It's not really ride the wave because it doesn't move. It's more of a drift. It's more of the lazy river than a wave. But I'll get in, secure my trades, look for just a little bit of a pullback, like right there. I'll get into another layer stack. And so this layer is secured for me for profit. I'll try to get this layer secured for me for profit, and then I'll try and get another layer secured for profit. And I do go a little heavier at night because I can kind of trust that it's not going to move. Like right now, I don't trust that we're not going to see a 10 pip candle, and that would be normal, right? Where it just shoots up, 10 pips. In the evening, you get a 10 pip candle. That's abnormal, right? It doesn't typically happen. So I tend to go a little heavier on my layers in the evening because they're easier to manage when they're only running 2 or 3 pips against you. So, but if you're not, if you're not used to stacking in and stacking in and stacking in on a run, this is good. Not used to doing something like that, then start out light by doing that. Because if you don't know how to fix your trades and you're not confident on fixing your trades, sometimes in the evening you do get a 10 pip candle out of nowhere, and those days suck because you can't recover. It'll move 10 pips against you, and then it'll come back 1 pip, and then it'll go up and down 2 to 3 right there. And you just gotta c'est la vie to those trades. And sometimes that happens in the evening. Let's see. Action point implications. What are you looking for to decide whether to enter trades or exit trades? Is it a particular candle? Good question. Yes, Remy. That was French just for you. C'est la vie, mon ami. Yes, sometimes it just depends on the trading day, what accent comes out. Okay, so just a brief overview of an action point. So this is an action point, basically areas of support and resistance. Because I have trades in the opposite direction, this action point get out of my trades or get in some buys. So if it crosses here again, this is where the buys happen. And But I don't necessarily trust it to buy right here, because you got this big candle over here on the 5 that, you're late on that candle. So you could see if it holds above this, and it also, this is like a 2 price cycle move. So it did ignore this action point. If you see that, it just blew right past it. So now is the question is like, okay, we're into a 2 price cycle move. If we get into a 3rd price cycle move, it could run all the way up to that, or it could come back down and test this. And so I think for me, what I'll do is I'll play the come back down and test, as opposed to getting into a 3rd price cycle and move all the way up to here. So what I'd like to do is be able to get enough here for it to come down to here to make this break even, to peel off some of these trades. Now I wasn't able to do that, but I will take the profit on these guys and start building it into a bank just in case I need it to fix these guys down here if it fails to break here. But again, overall, our market structure back is still trading in this area. Anyways, back to a simple definition of an action point. It's going to tell you 1, 2, or 3, right? It's going to tell you to get in of a trade or get out of a trade, or just wait and see what happens. And so that's the quick and easy definition of an action point. And it just correlates with support and resistance. And there's lots of little things like, we talked about like looking at the timer. Every single time somebody tells you a strategy or a technique, there's always more to it than just the surface, right? So like if I say, hey, look for a ride the wave opportunity, there's so many things like that you have to know and unpack. And at the beginning of your trading journey, you're just going to know 1 or 2 things, like where's support and resistance. But then as you expand your knowledge, you'd be like, okay, where's support and resistance in relation to a trend? Are we in trend? Are we in consolidation? Are we in a channel? Which way is the channel? Is it down? Is it up? If the channel is down, then, which it is right now, then is it easier for the market to make money on sells or buys? And so if it's in a down channel, you would tend to think it's going to be easier for sells. And so if you were looking for sell opportunities or to fix your trades, it might be easier to fix them on sells, right? And so there's a lot of different information than just saying 1 or 2 things. And a lot of times when you're taught something, you're taught the basics. And nobody really ever goes into more detail beyond the basics, right? Look at an M or look at a W when they're talking about candlestick patterns. But what they fail to say is look at the big picture. Is this a trending market, or is it a down market and an up market, right? Where this comes into an M, most likely going to pop right there. If it comes into an M like this, it probably is going to turn into a W, not an M, right? And so those are all the different things that you need to kind of look at as you start building, I guess, for lack of a better word, reading the language of the market. All right, so here we go again. Now, if it pops up, that's fine. So now we're right here. So I'm going to build into a heavier layer right here, because this is, to me, is a bigger action point than these guys are. So I'm building into a heavier layer right here with the idea that if it does come down to here and test, this could be my break even and get out all these trades with a little bit of loss or break even. And I'm still leaving some, still not have, still kind of over my 50% and my position size, but I still have plenty of bullets left if it decides to pop up and I do it again up here. And then that's just how I roll. That's how I trade, looking for fixing, then hit it. So float, gobble profit. Float, gobble profit. So we're right up against the structure of this channel right here. You can still say that we're still in it, but if it does cross this line right there, then it has broken the market structure. No longer in that channel. And probably correlating that to the one would be Rahi. That is a pretty good move up. So this tells me that we're definitely overextended and we're due for a turn down. Bum, 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 bum. Going back to what I was talking about bringing you guys multiple ways to get funded. The challenge is just one way, right? So before the challenge came out, we just had Beeline. There's Beeline, the challenge. There's also going to be 5 to 50 opportunities. And then there's going to be leagues. And then there's going to be probably multiple challenges inside of a challenge. And so like we got the growth challenge where you grow your account. And then we're quickly looking at coming out with an education challenge where you can grow your funded baseline through practicing in a demo. And so we're coming up with multiple different ways to trade a funded account. And what I meant by like a 5 to 50 account is eventually we're going to open this up to be a crew that people can buy into, and they'll get a funded account with higher leverage like mine, because then you can trade that account, because I'm going to personally be teaching those people who are in the crew on how to manage an account like if it was their account, and how to become their own risk manager and all that kind of fun stuff. So be able to open this up a little bit more on a 5 to 50 account. So those are the ideas, and you guys are in this getting ideas before you guys are get one in brainstorming and incubation ideas and then seeing come to fruition. So I reserve the right to change my mind on anything and everything. Which some of you guys who have been here since September have seen different things. But I think we have a clear path, good clear path that I feel comfortable with. Yesterday, working with Sean, we actually got for the first time numbers. So dev team has produced some reports with the Sharp ratio on them. They've produced some reports that I need for leagues. So and now we're testing and building that data out, all that kind of stuff. Awesome, Curtis. Welcome to the ranks of the challenge. So your challenge, if you choose to accept it, is to hit 10% before your account self-destructs. What's that from, Dad? I know you're smiling.
I've destructed a few.
Oh, I was quoting him. I was quoting a movie or a show. That's why I thought you'd know.
Inspector Gadget.
No.
Yeah.
Mission Impossible.
Oh, yeah.
Your account will self-destruct.
Yeah.
I thought that was Inspector Gadget.
If you fell to trade, if you fell to if you fell to challenge, your account will self-destruct.
I think they did Inspector Gadget too, but it was
did they?
Throwback, yeah.
I always thought it was Mission Impossible at the very beginning.
It was, yeah.
Okay,
Yeah.
okay. All right.
But they also.
So we're both right. That's what everybody gets a trophy.
Oh,
It would explode on Inspector Gadget, I think. But he's a cartoon.
What's that from? YouTube's gonna now tell me that I can't monetize this because I did that. Copyrighted material.
Cartoon companies that come after you with a strike.
I didn't know about that like in the early days, so I don't know if you guys remember. I don't know if you guys remember when Sean and Todd, like way back in the day, when they used to trade FOMC live on YouTube.
Mm-hmm.
Well, one day we did a lemonade stand. I don't know if you guys remember that. It's still up there. We kind of made a lemonade stand we just wanted to be different. So we made them a lemonade stand out of cardboard box, and we put them both in there for them to trade FOMC, and we put it out on the street. And they were trading FOMC, and we had some like kid music in the background, like lemonade stand. And I kid you not, we had tons of people stopping and thinking that was a legit lemonade stand with two grown men sitting in this with computers. And so we had to tell people, just keep going, don't stop. But I had kid music in the background. And not only did I not get like a copyright strike, it was like I got a couple of them because I didn't know we'd always have music in the background whenever we traded FOMC. And so that was the final strike. And so we got demonetized off of that lemonade stand. So YouTube didn't like us for like 6 months. So lesson learned. I didn't know that we couldn't have music playing in the background.
It was like kids music, like Baby Shark or something.
Yeah, something like that.
You got struck by Coco Melon.
Yeah, it was just to be kind of fun and go along with the theme of the lemonade.
Right. Yeah, watch out because Coco Melon is a huge channel. They'll come after you.
No, I don't know. This was like 2017, and so maybe they weren't moving around. I don't know. But yeah, so lesson learned. You got demonetized from the lemonade stand.
Okay, so I got a question about our setup. We're pretty deep in, and our little turning point. Our little turning point is a few pips away.
Mm-hmm.
The plan there is if it spikes through, let it retrace, close out, and then switch into buys.
Maybe because it's going to touch the top, right?
Right.
But I'm also looking for a price cycle down. Now I could have recycled these trades here, but I am looking for a price cycle down. So if it fells, there's a couple things you could do here, depending on how you're in. If it fells across here, you could just take that and then look to recover on the buys, right? Get the reset here. And you might want to do that just in case it does pop up and trade higher. But there's a lot of things that says no. This channel still says no, I don't want to go higher. And so that's why gotten a little bit heavier here is because there's a lot of things that are still saying no, but that doesn't mean it won't. And so if you're uncomfortable with taking with where you're at, you could just get that reset to 0 right there and then fix them on the after, fix them on the buys, right? So you take them here, take a little bit of a loss, and then fix it on the buys. For me, I'm looking to see if it's going to touch this. And if it does, I may just build into a few more. But if it comes down here, I may just take these as profit and recycle this layer. We'll see where it wants to go. This is my action points for me. So not necessarily the market, but here's my action points on what the next play is for me. So inside of here, if it decides to consolidate, I may just take and recycle. But the more it consolidates, I could see it continue the market structure and break down. So we'll see. But if it comes down here and stalls, I may take these guys out for profit. So I'm going to flip this down here. And just peel some of that profit off. The risk becomes where if it comes down and breaks through here, then I could have used those guys to fix these. But recycle is always in play. Like right there, could have recycled these top guys. To start looking for hunting for opportunities. In fact, maybe I'll do that and I'll keep these layers in play. And I'll dip into some of my fix-it trades for just some 2-pip profit opportunities. And just start putting money in the bank. Because it's kind of what you need to do when you're in situations when you're not quite, when you're on borderline fix-it mode. You can dip into your fix-it trades, or I do, or just some quick hits in either direction. Do. All right, what you gonna do? You can kind of see that it's coming into, this little bit of either a wedge or a flag, a pennant, whatever you want to call it, but that's what's happening right there. Then what's gonna happen when it breaks? What you guys know?
And if it's a pennant, wouldn't it break up though?
Mm-hmm. I was just going to ask that question. What direction will it break if it's a pennant? And you gave the answers. So before it does that, if it breaks here, then it's no longer a pennant. What is it?
The reverse.
Yeah.
I failed.
That's why it's hard to trust. That's why candlestick patterns are so much easier to spot in hindsight.
That's the key.
M's and W's.
So we're still early on this candle. So right here is my action point. If I'm close to break even, I could take it, which I think I will right there. So on this guy, just because it's coming down here and testing, and then I'll get back in because it broke this. If this was 2 pips, I would have bought back in. But I'm not necessarily a buying fan because it's still in market structure. But what I am is reducing my position fan, getting back to reset to 0, so I can kind of not risk it, my risk reward, if it does decide to just shoot back up. But you're still well within structure of this channel. So in a channel, like if it comes back down into here in this range, it could come all the way back down. So again, me just reducing, I was just a big fan of reducing my positions and not having that big of a risk on in case it does go against me. And then just look for opportunities to build back in to recover on I think I lost like 0.38, something like that. So lost like 0.38 of what I had. So that entire move was there. Obviously now hindsight says, well, you should have held on, but sometimes I'm a big fan of just reducing my exposure from the market. You could have done a couple different things where you could have just peeled off your losses and let your winners run too as well. But sometimes getting that reset to 0 is more psychologically powerful than trying to fight through a losing position. So now that I have that reset to 0, I can kind of reassess and still say, you know what, I still think that the sells are still in play because we're back into market structure. But it could come back and test this. If it gets a little bit of a pullback right there, I'll start to build into a sell position without take profit. It's just not a bad place for take profit. Throw that back on. Prefer this to be just right there. All right, guys. Let's move into the challenge portion real quick. What do you guys want? A level 1, 2, or 3 challenge today? I think I'm just going to start kind of rotating through that maybe because we got people here with all different skill sets. And so focusing on kind of what I was talking about, like this could be a pennant, but then it didn't turn into a pennant. It's like you got so much information that if somebody says, look for pennants and only trade pennants, well, is that on a trend in a channel? Is it a trending market? Is it and that's more level 2. Level 1 would be look for candlestick patterns. Level 2 would be look for candlestick patterns and what direction is trend, all that kind of stuff. And then looking for more information. And then level 3 would be how to execute that, right? So we got 1 vote. That's it. 1 vote. Ivan says 3. Anybody else want to vote on what the challenge is going to be today? 1, 2, or 3? Next 2. Nick, I thought you were a half.
Hey, Dave, I did something yesterday, kind of a personal challenge to me that I thought was very educational, very helpful. Actually tried to land right on the $100 mark to the penny.
Ooh, that's very risky.
No, I mean, I was doing all kinds of positions, and when I got down to within like 10 cents, I was paying 0.01 and trying to land. So I kept going back and forth on, but I used every kind of position size you can think of. I thought it was kind of cool.
That was
Yeah.
one of the beeline exercises.
Oh, was it? To
Mhm.
what? To hit? What was the exercise? I don't remember. It's been years. What to hit a certain round number?
Mm-hmm.
Mm-hmm.
So the reason why I said that's risky is because it's always I need one more trade to hit my goal. That last trade turns into 10 more trades because you got to fix the last trade that you put on. It's without fail. Whenever I say, okay, I'm $20 away from a round number. Well, I'm got to get that $20. We ended the session on this down candle or something like that, and I'm like, I just don't trust it, so I bought in pretty heavy down here for the ride all the way up to there. So 100% retracement on that, so that was pretty good. And then I did the same thing right here, but I got out right here, so I'm not riding. But it should have, but that's all right. I was like multitasking at that point. I was working and trading on one screen. So I'm like, just get out.
Those little creeps, like what you were talking about, where it just ticks down for 30 minutes, those drive my mind nuts. I don't want to trade them.
Like right here.
Like if you go over the 1 minute, where it's just
Like
down. No, right before that. Even that whole V, those make me nervous because there's not a lot of activity and there's a lot of pips.
So has it already happened today?
Yep, we're done. See ya.
Man,
You missed it.
it's done.
It was right here, this candle. No, it doesn't happen. So FOMC happens in two stages. You get the report that comes out at the top of the hour, and then you get
You're a little low on volume, brother.
Sorry. When I lean forward, that's my microphone. Now can you hear me better?
Yeah, much better.
Yeah. My microphone only picks it up if I'm in front. So I could go like this and start talking about you.
So this comes in at 1 o'clock my time.
Yep. Top of the hour, the report will come out, and then there's a news conference and half an hour later, and then you get a lot movement at that. So it's one of the larger time frame news events that usually you just get a report, boom, it happens, and then it's over. But this can last for a good 45 minutes of solid craziness. And so highly, highly, highly recommend that if you're not willing to risk what you made, to do it in the demo account as a practice.
You know me. I throw the whole kitchen at it every time.
I know. So we're going to start out cool with trading one full lots today.
I'm like, okay.
and we're going to do it in your $5,000 account. Oh, wait, do you have a $5,000 account?
Remember I messed up that one? Now I'm trying to rebuild it back up.
No.
Oh, you mean for my
5 to 50?
No, you know what? I have not signed up for that. Not yet. I should. Well, how do I use a different email to sign up since I already have those other ones?
Nope.
I can use the same email?
Yep.
Okay.
I've been working on computer problems. It's frustrating. Like, not my computer, but I'm trying to. When you dig into the world of like APIs and integrations, that's a new world for me. So the problem's most likely on my end, and trying to figure it all out. That's what I'm doing.
So are you doing any trades above and below ranges? Or are you just going to wait and see what happens?
I would like to, but where's your range?
Yeah, no, the range is gone.
Like go to the 15. Like go to the 15 minute. You can find a range.
That's true. That's true.
I mean, it's such a big movement. Anything inside the 1 or the 5 is
And
Fuck.
still, I don't
Look,
think,
yeah, look at the
50,
1 hour.
Go out a little further than that.
like, where's the range, right?
Look at the 1 hour chart.
Yeah, the 1 hour chart.
Still, no
See, it's
range.
breaking out.
Even
I'm
though the
looking-
1 hour chart, man.
Yeah,
It's breaking out.
It's breaking out. So what is this? How do you guys usually play this when you're into this kind of stuff? Like, I mean, if we were,
I go to gold. Like gold has a nice range off of its spike yesterday because gold just waits for FMOC and has
Yeah, but you
literally been
can't-
waiting for 24 or 40 hours.
in here, you can't go to gold though.
No, you can't in apiary,
Yeah.
but gold's got a nice range.
So that's the thing. So what I do, let's talk about it for a second. So in news events, you're either going to get this where it's consolidating, waiting for a pop out, or you're going to get this where the market is moving clearly in one direction, right? Now, this makes me a little bit more nervous than having a range, but if generally it moves in the direction that it thinks it's going to go when the news pop happens, so if it's going up, so when the news pop happens, it could come down and just be a corrective move from this, and it could come down all the way down to here, right? And so I would think, but not confident enough to put trades on it. I would think it's the first shot is going to go down because of this move higher. However,
And then-
you could do the, man, I got, what the heck is a Arasaki? What is that?
It's a spy master from a book I read like 30 years ago. He was just really cool. Lost all of his shit and stuff and managed to survive. Kind of like me, lost most of my shit and I'm still here.
Arasaki, and then the two, any semblance, or is just because you couldn't pick Arasaki, so you had to go with the
Yeah,
two?
because apparently Arasaki is also a bird reserve in Japan.
Got it.
Easy parent with Harakiri.
Oh, guys, by the way, we have a little scammer going on in our server right now, FYI. And he's posing himself as Patricio. So I kicked him out once, but it looks like he's back. So he's using the same icon and name as Patricio, but we have, if you look, there's two Patricios in our server now. And he's hitting up Khalid, and he just told Khalid that he makes millions of dollars for his subscribers through Bitcoin and investment strategies. And they also have the same scam going on Apiary Fund right now. And Nate just hit me up saying somebody's trying to use Apiary Fund to get you guys into crypto.
Let me guess, he uses FTX.
Oh,
there's Pat right there.
Patricio,
Okay, so
are you
this is
scamming
the real
everybody?
one.
Are you scamming everybody right now?
No.
He was
This is the
alternate
real
self.
one. I don't know who's the other one, but this is me.
Sure. Yeah. This is all part of your plan.
Right.
Don't
This-
listen to
I'm
me.
so
Listen
happy
to
here
the
in
other guys.
Bahamas. I'm so happy here in Bahamas. So
You're not making millions of dollars on your subscribers in crypto.
no, not that I know of. I need to check my balance, but I'll be great. But anyway, this is me. I know that there's another account. Cancel that one.
Oh, I kicked him out and he keeps coming back in because I can't control the name he picks I can't control the name he chooses and the image that he uses for his profile.
So that, I don't know, is there a way we can securitize what we're doing?
Well, anytime you
Doesn't
see,
matter.
Patrick, like he just joined again the server. So,
But is he using my image?
oh no, he's not on our server anymore. So he's just hitting up Khalid privately now because Khalid answered him.
You can see that.
Khalid's sharing me his chat. That's why I can see.
Oh, okay.
So he's just private messaging Khalid, and since Khalid's answered him,
He engages.
they're engaged in a conversation. Okay. Right. So, but it looked like you. I mean, it didn't look like you, but he sent me a screenshot and I'm like, that could be him because it was a screenshot of you asking him how his trade's going. That was it. How is your trading going? I'm like,
Really?
that could be something he would say.
Is there something on my end that I need to do, David?
Nah, just stop scamming people.
That's it.
Yeah, just stop.
I mean, with all the free time I've got, there's nothing else I can do.
Dude, it is so good to hear your voice. Where you been, brother?
I mean, I've
seen
been
you
in and
on.
out on our morning sessions, but I have a day job now, so that's taken. And I've done some traveling. I have my family visiting from all over the world right now, so we have a full house.
Are you still down in Mexico?
No, I was in Merida for 15 days, and I came back 3 days ago. So I'm in Mexico, but I had all of my kids come and visit yesterday and today. I just got back from the airport.
Yeah, I may take you up on that Cancun location you have there this summer.
Okay. You're all welcome.
I'll let you know when it's for sure.
Yeah, let's announce that to everybody.
Yeah.
I mean,
anybody that's watching this on YouTube, you're welcome to stay.
Oh, are you recording? Oh, sorry. Anybody on YouTube? Hit up the other Patricio, not this one.
The other Patricio, the scamming people. As long as
our next news trading we can do from Senior Frogs. That would be a riot.
That would be awesome. I don't think you could hear anything, but it'd be fun.
Okay.
That place is so loud. Oh, let's see. Here we go. Ash says, if you join the 5 to 50 challenge, do we continue to get access to the live trading Zoom also? Absolutely. Joseph said there's a wide diversion setting on the MT15, possibly a large drop. Yep. Oh, just so you know, Joseph, and when I put that GIF in Trade Talk about it's about to go down, I wasn't doing a market calling. I was doing just letting everybody know I was going to open the room up. Okay.
Just securing some profits, that's all.
All right. So just kind of waiting. Usually I like to trade the pre-news, and I might just jump in to some lighter positions here and try and get in and out, but got 10 minutes left. We'll see. And just kind of did this little pop-up, but usually pre-news kind of moves, kind of has some good movement because you got a lot of people coming in, waiting and trading. But then everybody likes to get out about right now. So could have missed that. But so what I was saying is that if you wanted to do, and then I got sidetracked on your name, Arasaki.
Dave, I'm sorry, your volume's still lower.
What?
There you go, much better.
If you wanted to trade the I'm calling it the Arasaki method, the Arasaki method, we could put a pending limit, a buy limit, or a sell stop on. If you wanted to kind of catch that, but you've got to be really quick to get out on as soon as it stalls, right?
Actually, this time I'm putting a take profit.
What? How do you put a take profit on? Oh,
Pending? Yeah, you put a pending, you put a take profit at like the hour.
Gotcha. Well, how wide are you? I'm like, I want to do that. I want to just every trade I go in, I want it to be a profit. I want to take profit on it. What's your take profit set? What are you setting your take profit at?
I'm looking at Euro USD. I was setting up gold.
Oh, gotcha.
So
But I
David,
usually put it at a level or two away on the hour because it has a tendency to break more than one resistance or support.
I'm going to put a sell stop on. And
can you teach us how to do that, Dave?
Yeah. So are you trading Alveo or MT?
Alveo.
So you just right click. If you're below price, it's a sell stop or a buy limit. If you're above price, it's a sell limit or a buy stop.
Oh, okay. And how do you set the take profit and the stop loss?
So once you get in, then your trade's here and you can double click on it and set it manually, or you can add your take profit right there, hit submit.
Okay.
Oops, you can't do that. So if you click this, it puts it at the order, and then you just have to other way around.
That's a trailing stop, right?
What I do just to make it easier is I just come down here, magneto profit, my buys, all my buys are my sells, click all, continue, boom.
Okay.
Select it wherever I want it, right? So let's see here. If it does pop down, I don't think I'm going to do that.
Is it going to go up or down?
Yes.
Okay, that makes it easier.
Hence the I'm calling it the Arasaki method. Josh.
So our news specialist, what is he saying? It's going to go up or down?
Well, they're going to raise the interest rates, right? And so if they rate, everybody believes it's going to be like 50 basis points. But if it's out of that realm, if it's lower or higher, or they don't do it, then the market could, well, it'll move a lot more in that direction. Initially, you'll get a pop either higher or lower. And generally, I look for the pullback to about 50% inside of the next one or two candles on the minute chart. That's generally how I trade it. And so for me, I don't usually put a pending order on that if it comes down, because what happens is sometimes you can get a flicker where it just comes that and it goes that, right? And you don't want that to happen, because now you're into this trade and now you're losing on this trade, right? And so I don't want that to happen. So if you have a pending order on, you got to be really, really quick on the draw. Plus you also have spread. Like as soon as spread starts to widen, if you're too close, the spread could enter you into the trade, right? And so you got all these things that could trigger, and you don't want to. And so what I usually do is I just wait for the pop, fade the pop. And that's how I usually play news. I wait for the pop, then I fade the pop on the news. And if the pop fails, so let's say it just pops and it comes back and it fails to hit 50% of this line. So this is the fail where it just comes up to here. Then you get out, because you generally get a continuation of the move, right? The difference here with FOMC, as I was explaining a little bit earlier, is you got two news events back to back. The first one, number one, is the report, and that comes out in 6 minutes. And then number two is you have a conference, so a talking head is what they call it, right? And so the conference starts at in a half an hour, so 30 minutes after the report comes out, the conference will happen, and that's a little bit more difficult to predict. If you're listening to it, then it's kind of interesting, because no matter whatever he says moves the market. So if he says, we have confidence in the economy, well, that could move the dollar, right? And so if he ever says confidence or inflation, or he says, yeah, we're looking at that long term, that could weaken the dollar. And so it's all about what he says, when he says it, and that drives the market. So recommend, if you're trading an account that you care about, go super light and gobble up a lot of profits or a lot of pips. If you are trading a demo account, have fun. I'm going to move this down just a little bit, and we'll see what happens. But at the end of the day, the first initial action is really quick. And so that's why it's just like, that's it. But you just got to be quick on the draw, right? So
this is literally our equivalent of Las Vegas.
The gambling.
Yes.
I don't think it's as gambling as much as if you do the pullback, though.
No, that part's strategy. The part where you're just like, I'm going to put one on each side and see what happens.
That is gambling, because I've done that. I've done that. And the reason why I don't do it anymore is because you put a pending order here and a pending order here, and the market goes boom, 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 and you lose on all of them. you're like, wow, that sucks. I've lost on both sides for sure. And so that's why I'm not necessarily taking it, but I don't want it to hit this pre-news. And so this is coming down. I don't want it to hit with the spread. I don't want it to hit pre-news. So I'm just going to lower it down here. But I may, since it's ran a little bit away from there, I may just do that too. And I'm super light too. And I got enough to probably going to do this. I'm just going to play with 2 trades. And instead of getting into multiple trades where I got to go click, 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 and close out the different sides, I'll just increase my position size just a little bit and play with 2 trades. And 2 trades are a lot easier to manage than 4. Ash just says, to be clear, we're going to lock down Zoom. Yep. So if you join the 5 to 50, you'll have access as long as you're paying somewhere, somebody, something, right? You'll have access to it. And then what I meant by that, as long as you're paying Apiary Fund, Trader on the Street, or in one of these challenges that I'm launching, you'll still have access to Discord and these type of things. And you'll also get, when we roll this out, trying to roll it out before the end of the year, when we roll out the NIV version of leagues, you'll also get that everything inside the leagues for free. The first part of it will always be free. It'll always be free to everybody. But if you wanted to get funded through leagues, that'll be a cost to that. But as long as you're paying somewhere, as long as you have a subscription to something, leagues will always be included in that subscription. All right. What's it going to do? Channel your inner Arasaki.
It's going to the right.
Josh are you in gold? You doing gold?
Yeah.
Anybody else doing anything else? Joseph is asking, where did Patricio go? He has a bunch of family over, and he just wanted to jump on to make sure that everybody knew that it wasn't him that was trying to scam you guys. And we're like, yeah, good one. That's exactly what a scam person would say. All right, 1 minute. Spreads have definitely increased. Check out them spreads.
3 seconds.
3 seconds.
We're at 3 on the spread. There we go. So now I'm going to get out of my buy so it doesn't flip out. And I'm going to take my profit on my sell right there. And then I'm going to start fading this a little bit. Fade that. I'll probably get a little bit more. Oh, didn't mean to. And probably just pill out for those guys. Now you kind of wait and see. Is it going to have continuation here? Or,
whoa, I got some bad slippage.
Yeah. Is it going to continue here, or is it going to get a full retracement all the way back to the top, right? And you don't know. Just don't know. So, plus you got to cover spread, which is all over the place. And so, what was that drop there? 40 pip drop.
Yeah.
So I probably on that. I used the Arasaki method, and I probably made a grundle on that because it was at least 40 pips I probably took. Thank you.
Nice. Mine got about 20 pips of slippage.
What? 20?
Yeah.
20 pips. That's crazy. 20 pips. All right. So now you got to look at spread here. If you're going to take any trades, you cannot go for 2 or 3 pips. You can't go for 2 or 3 pips. So I'm going to increase that to probably 4 and just seeing if I can't get some little pops here. And just taking both sides until it really decides, just staying super light. doing this, you're probably going to get burned on something. So stay light. You're gonna have to give some trades back to the market at some point. Like this trade right here, I may have to give that back to the market. And so if I'm going to do that, I'd look to do that on a little bit of a whip back. So I do like the fact that we've got a little bit of pressure coming in to push the market higher or back, seeing if we don't start to fib this. I'm not going to fib this until the candles start to come back to normal. Not even going to look for that. I'm just kind of sitting on the hands, just taking up little sips out of the market. See if we can't just get little tiny pops here. Probably go back to 3 here. Do that. Because the report is kind of over. People have analyzed it. And so now it's just reacting to it. I want it right under that. Key here is just taking a little bit of profit inside the candle. You don't want to have your take profits greater than 50% of the candles because it's more likely to just go back 50% of each candle.
Battery low.
Uh-oh, somebody's battery's low. Means your computer's going to shut off. Better plug it in. How did everybody do? Everybody survive that? Anybody?
Yeah, no problem.
Anybody make a killing off of that, or take it in the shorts?
No, just $400
on gold, even with the 20 pips slippage.
Yeah, because it's jiggling. That's why I got out, and I'm waiting for it to settle and do a fit.
Yeah, that's kind of what I'm doing too. Just taking a little bit of sips here, sips there. Sipping my hot cocoa. Speaking of that, my wife put together an amazing hot cocoa bar like this year with all the fixins and everything. So I've been like living on that past couple of days. So I'm taking this one because I got profit right under this right there. But if it pops down, I'll add more. It's kind of starting, I'm hoping, I'm thinking it's starting to slow down, stabilize a little bit, have them coming back into price action situations, but we'll see. Just taking little sips out of the market. Zotolo, what is this? I have found a profit. Cool. How are you doing? You trading with those one lot trades? Oh, he's silent. He's gone dark. Uh-oh. Is he still on here? Maybe we need to do a welfare check. Oh, I think he bounced. He's gone. All right. Now kind of look for the fib on this move here. Wow, that was the wrong tool. I usually go body to body on this and kind of see if it's going to give us that 100% retracement. Now, I'm also, because it's FOMC and there's another news event coming out in 20 minutes, I'm not putting 100% stock in this retracement. As I say, it does it just because you have a lot of traders coming in right now, and you have a lot of traders trading this right now because this is probably like the last major event of December before people just bounce for the holidays. And so everybody's trying to get in and get their trades on before it slows down to a crawl. Joseph asked, what do I do if it retraces 100%? I wait till the news conference, or if I see a consolidation, I'll play that. But really, I'm just wobbling in here right now, waiting for the news conference is kind of what I'm doing. Just using the wobble technique right now, waiting for the conference to happen.
The Dow was down 400 points,
So
almost 500.
So kind of my, is like, hey, it kind of what I was talking about earlier is you sometimes get this pre-news move right here, and then it pops in the opposite direction. And so it'd be interesting. Did they actually increase the rates? Did the report, were they on the money with the report that came out? Because if they were, this is the action that I would have predicted. If it wasn't, it would have had continuation. Just curious.
4.5.
4.5. So they didn't change it. They didn't touch it, huh?
No, they went up a half.
Oh, okay.
It was 4.
Oh, well, Joseph said rate stayed the same, but it stayed the same as expected.
Yeah.
Got it. So, yeah. Anybody else have any insight or thoughts or about this, or just happy to be staying alive on it?
For me, Dave, obviously this is much better than the last one I did.
Oh, was the last one non-farm, or did you try?
Oh, no, whatever announcement was, right, is that I didn't have any take profit or anything like that, and so right now I'm just scalping. I was, three, 4 pips and stuff like that, and it's hitting. It's every time. It's almost like fishing in a barrel, right? But you can't do too much, right? And so
can't go too heavy.
They can't do heavy. I can't be myself.
Right. That's why I asked. I guess you were off camera when I said.
No, I had an appointment. I totally forgot about it.
I'm like, how do those one lot trades work out for you?
Well, I mean, if you're taking 2-3 pips, it's fantastic. But so yeah, I mean,
are you really trading one lot? Cool.
No. 0.1.
I mean, would you tell us if you were?
I'm at the point right now that there's a lot of stuff that people do behind the scenes because of the human tendency, and I'm not any different. And so I know that in order for people to make some really, really good profit, they got to increase their lot size, but they got to also temper it with the balance they have on their account. Like if you have $1,000, you can't trade with one lot. You'll lose the whole thing. Ask me how I know. right? So it's one of those things that I think we're all wanting to make the money we need, but I think at the same time there's got to be patience, and it's one of those things that I keep telling myself, and I'm patiently impatient.
Well, my wife's name is actually Patience, and
So you have no excuse.
I know everybody. This conversation happens almost weekly if we go out to eat. Is your name really Patient? And and if I'm there with her, and she's like, "Yep," and I'm like, "Are you a patient person?" And then they always ask me, "Are you patient?" I'm like, "I have all the patience I need." I don't want any more.
As your wife's smacking you.
Yeah, exactly. I said, "God grant me patience," and He did.
And that patient probably comes with long suffering too.
I'm gonna tell her you said that.
Well, no, she needs to be long suffering.
Hey, who here is going to the holiday boot camp starting tomorrow?
Yeah, tomorrow. Can't wait for it.
That's awesome. We'll do some fun stuff.
I haven't received the link yet.
I'm not in charge of that, so I don't know what to say to that. But you probably should.
Yeah, I emailed Barb. She's going to look at that.
Last time the FOMC hit, it did not do this. I think it just ran and ran and ran, because I remember that was the day that we traded with Sean. And everybody, maybe it was last month, not sure.
Yeah, no, don't go.
Everybody doing this type of thing, just taking sips out of the market, getting that up and down movement.
Yeah, 3 pips here and there.
3 pips here, 3 pips there. I just took those because my intuition is saying it's gonna try to move up and test the top. Nothing else other than that. Because I don't trust price action. I don't trust confirmation stuff right now during news events. Throw that all out the window. It's just a gut feeling that I should be looking for.
It's interesting. Your gut feeling is doing that. My gut feeling is like, it's going to do exactly what you think it's going to do.
Oh, so your gut feeling is confirming my gut feeling?
Yeah.
Well, maybe we just need to eat.
I'm gonna use David. One of my confirmations is David.
Yeah.
The D confirmation. No,
well,
but I think
don't use it because look, it's going down.
But what you're interesting, what you were telling me, because I think sometimes I feel like, and nothing against you or Sean or anything like that. It's just because you guys were both making money, even though you're calling it in your perspective.
Right.
And one was going up and one was going down. And I think that's where some of the confusion goes with us humans, because we're so methodical in certain things. And this is not. This is unreliable, or you don't know the next minute that's going to take place. There's just that probability. Yeah.
Yeah. And you just got to keep reminding for me, I got to keep reminding myself that, okay, we're still in the aftermath of news and on the heels of another news announcement. And so really, you don't have structure into the market. So the best thing to do, keep it light and take profits, right? Just wobble through all this. Because would anybody say, well, I didn't expect that, if all of a sudden a candle popped for 30 pips? I don't think anybody would be like, where did that come from? And be amazed that something like that happened. Right. And it could happen at any moment. You could get a big old breakout of this candle right here, and it could go to the top in like one or two candles, and that's a 20 pip move. Right. And I don't think any one of us would be like, well, I didn't expect that. Where did that come from? But a lot of us probably be like, oh crap, that just took all my profit. Right? If you were on the wrong side of it, of course. And the same thing, if it comes down and tests here, it could pop and go lower. I don't think it will, just because it had this pop. More likely going to try and reach higher, but again, the same thing. We don't know. And when the conference comes out, it'll go all over the place for a little bit and then stabilize. The moment that these candles go from 4 or 5 back to like 1 or 2, it's done. But you're pretty much, there's no impact. Everybody's gone. The market's gone. Probably shouldn't trade anymore. I'm not countering that because it's doing what I felt it was going to do. I'm just saying it sucked. I wish I would have gotten in right there. So I'll look for a failed attempt of the lower, like if it fails to break right here where my mouse is, and I'll probably start buying in a little bit here. That'd be pretty cool. Not going to go for it, but I was just thinking, I don't remember the last time that I had back-to-back 10% days. But again, not going to go for it. But I'm like, that's kind of cool. Back-to-back 10% days. I thought of a really cool challenge too that I will do tomorrow. Something that I talk a lot about, but we've never done as a challenge. That's a teaser right there. See, getting better at marketing, Josh.
Like you've done this before.
Stay tuned. If you want the best challenge of the entire month of December, well, it's tomorrow.
Click here.
Exactly.
Click next.
It'll change the way you trade. Have I done a lesson on when I cut trades? Like that's the whole wobble technique really is, and I'm not sure if I understand your question 100%, but when I take a loss, I take losses all the time. But when I cut my trades, when you're like, okay, I'm hitting the X on all of them. That's what I call taking the max loss. And so there's a little bit of you can't answer that question in just a blanket statement. Like, when do you cut your trades? I mean, I cut my trades all the time, but when you take a max loss, I always have that predetermined in my mind. So let's say I'm in buys right now, my max loss that I would probably take, well, on this, it would suck, but I'd probably just cut it if it went past here, right? But before then, I'm fixing them. So, and if it shoots all the way down here, I'm not taking it either. And so it just depends on how fast it gets to that point. Like if it's one candle all the way down, I'm fading it, leaving these guys on for a pullback back up, then I'd get out and hit the X right here of everything. So there's a lot of variables to that question, but yeah, I have done a couple of videos on taking the max loss or avoiding the max loss. I tend to not take a max loss because I've avoided it through the proper managing of trades. And so that to me is more important of learning not necessarily when to hit that red X. Yes, you do need to know, but more importantly is how to fix your trades before hitting that max loss. Sometimes you have to. Sometimes you have to hit that eject button. That's what this 35 pip stop loss is for. Which probably should have widened that out with everybody. Usually I widen that out on news events because you could get 50, 60 pip pops and then come all the way back 50, 60 pips all within less than 2 minutes. And so I've had that happen before. I'm going to use Cool's quote, ask me how I know. When you have too tight of stops in the news event, you know, like, hits a stop, hits a stop, hits a stop, just like smacking you against the wall, both sides. It's not fun. My chart has a gap on the 1 minute. Let me just refresh that one. Oh, no, I can't see it. All right, so this is kind of the thing that I'm talking about, like case in point. Like, are these trades up here still good? Yeah, maybe, but these take profits aren't. So they're not in a good place. And so I need to bring these take profits down to where it's going to be easier to hit. Now on this trade right here, I'm not making very much, especially if spreads one. I'd probably taken a loss on those trades, right? But it's still a better place to hit to have a higher probability on those trades. And so this layer right here needs to give me profit to get out of these layers, but they don't have enough on here. But at the same time, I'm also kind of not trading normal trading rules because they're still in news. It's kind of given us that structure for sure, but in the next 5 minutes, it's going to go it'll ignore price. That's probably the best way to say it. Same thing. I like to be out and be flat if I can before the conference. But we'll see.
So we can probably just call these type of days as H&P techniques and strategies, right?
No, there's definitely some technique and strategy to trading the news, right? What you will see on YouTube is people fading this for like, they'll throw on like $5,000 and they'll come back and make like $2,000 and then they'll post it and say, watch me make $2,000 in 10 minutes. And then that to me is gambling, right? But that's what people like. And I say, don't do that, Cool. I gotta make a house payment, so we'll gotta put that all on the line. Trading for paychecks. There we go. That froze on me for a second. That's the worst. If you're like trying to get into a trade, or even worse, trying to get out of a trade, and you hit that X button and it just doesn't do it. Computer freezes or whatever. Oh, I hate that. All right. Getting closer. It's getting closer to the time. Anybody listening to the conference? Anybody do that? It is interesting for sure if you do listen to it, and then you start picking up on keywords that make the market move, and you're like, "What? Why did the market move when he just said that word?"
No, he kind of makes me mad.
Then you're a angry trader.
I wouldn't be if I watched him.
How are you still in your gold?
No,
So,
I'm a little bit in Euro USD on the apiary account.
all right.
I'd really like to close those out.
Oh, are you in buys?
Yes, but they're all about to close out here in about 2 pips.
No, you'd like to close them out because you want to be flat.
Yeah, because I don't know what's going to happen in 3 minutes.
Yeah. Same.
I have my gold flat.
How many monitors do you have, or screens do you have? Do you have different accounts on each screen?
Yes.
Are you like Cliff? Like,
Well,
screens?
I've got a little monitor that I put the view in video conferencing. And then I've got the laptop itself that I trade apiary. And then I've got the big monitor that splits in 4 screens that I put the other 2 accounts.
Got it.
And I can put trading view above
Oh,
them.
yeah. That big monitor. You can put like 6 monitors inside of one monitor.
You can, but I'm still too old to see that. So I just put 4.
What's the monitor size?
55.
Is it 55 inch? And you can't see it?
I'm old, man. I'm almost 50.
How far away is it from your eyeballs?
I'm touching it.
Oh my god.
There's a reason it's warm.
Lots of funny things that I'm thinking but not saying. So you just have to laugh.
I don't know what you're talking about. This is business use only.
It's trading and it's a light therapy at the same time.
I don't have the heater on in this house. I just turn on the monitor.
There you go. There.
Okay, I'm flat.
Me too.
Oh,
Yeah.
I made money in apiary.
You see that? Joseph said that he was pole vaulting when he was 50. So,
Yeah.
Josh, you need to pick up pole vaulting.
No, I still race cars though.
Yeah, so
But anything physical.
How do you race cars without being able to see the road?
You can't. You're going 200 miles an hour.
Yeah.
It's planned.
That's true.
200 miles an hour is a football field a second. You can't see shit. That bug gets in that window, there went your eyeball.
All right, here we go. 12:30. And the spreads as soon as it's not at 12:30. It's really when he walks into the room and starts talking. You'll start seeing spreads go. And spreads are all over the place right now because obviously that hasn't really happened. So they're like, where do we go? What do we do? All their liquidity providers are changing.
For the press conference, I don't do the one on each side because it's to whatever he says.
It is. This is like the weirdest news event to trade because you don't have a report and it's not instant. It's not a fade. It's whatever he says. And he could say it out of the gate. He could say it in 5 minutes. He could say multiple things.
Yeah, I don't understand why these people are getting all this money to throw at the market based on what one dude says during a press conference. I get the report stuff. I don't get the FOMC.
Or any summits or anything like that.
Yeah.
I agree with you on that. Dude, are you serious, Jozo? I thought you were joking. You were a pole vaulter? That's amazing. We're gonna have to see some footage of this. Do you have anything on YouTube? We're gonna have to see the amazing Joseph pole vaulter. 65 and you went 12 feet, man. I hope to get high when I'm sick. Get high. How do I say that? At 65.
Oh shit! I had to Google pole vaulting. I forgot about that sport.
You were doing that at 50?
He's 65. He was hitting 12 feet.
Man, 3 feet off the ground, I get nervous.
Look at my own feet.
That pole's bent. I'm out.
You don't want to Google. This happened to somebody here locally, I think. Yeah, locally, because it was in the news locally where a pole vaulter, a dude kind of, the pole went to where you don't want it to go.
Oh, wow.
And it was all.
I'm looking at the picture where the pole just broke. No, Ed, you're braver than I am.
All right, where it's still. I just don't trust getting into anything right now because it typically you see a pop, you get a pop, here a pop, there a pop, everywhere a pop, pop. But this is a nice little pattern. You know, what candlestick pattern is this right now that it just formed?
Okay, he's
Leading triangle.
It is roughly unchanged through the first three.
Oh, I thought you were going to get mad if you listened to him. But now you're listening to him?
Well, he does, but I'm kind of wondering what the market's doing. And he talking.
All right. So 3 minutes in and he's starting to talk. So we'll see.
Yeah, kind of giving a report of mortgage rates and interest and that we've heard.
Yeah, that's usually the preliminary. And then he can say something, but usually it comes when he's done talking and the question and answers start firing. It's usually when you get bigger.
Oh, he must have said something.
Must have said something.
272,000 jobs per month over the last 3 months. Although job vacancies have moved below their high.
They don't like that. They don't like the jobs.
Available workers.
Oh, wait, no.
Yeah, here he's talking about labor.
They do like it. Never mind. All right. Take this off now. Ooh, getting around.
So that close to the bottom of that fib, you would buy?
Yes.
I was afraid to because
I was just going for a little quick little hit.
Okay. Well, I was afraid to because if it broke it,
But it was
it's got a long way to go
sure but
to
it was
retrace that last one.
It's also one trade, 2 trades, right? So I can give those back to the market pretty easy if it comes up, if I get a little bounce up to the top. Uh-oh, somebody's smacking into some trades. I can hear that.
Percent in 2020.
Oh, no, that's probably me. I'm trying to get this program to work. I think it froze. I'm clicking on it.
You break it?
I broke it. It's restarting.
Oh, no. Fine. How much was this drop right here? Another 30 pips right there. Just looking for it to go 50% of this move is why I'm still holding on to these guys right there. But I don't like these wicks. Just probably smacking just a few quick hits here. Makes me nervous when it's playing on the bottom. Get away from that bottom. Really? There's not any movement. There's like that one move and then small moves. Whoa. Spread just jumped from 0.02 to 1.2. Okay. Big old jump. He must have said something. But nothing reacting.
He's concluding. So question and answer probably pretty quick. Questions?
I'm getting a little bit like I hate having these trades on this long and it playing at the bottom and keep testing. It's like I just don't want to be on the wrong side of this, so I might just close out.
You're hard to hear again.
That's because I'm mumbling.
Oh,
Because I'm like,
I got two people mumbling on my computer.
yeah. I wish I could make the market move though. They're my mumbles. What do you see?
Ooh, damn. I'm gonna snatch that close.
I'll
Shit.
take that.
My ex wouldn't work.
Fade that. No. Fade that some more. They didn't like what he had to say.
Peak level will be, as you will have seen,
I think I would wait for another big pop to fade.
You will also,
They're talking about a peak rate of 5%. So
Is that what made this pop up or something? Or is
Yeah.
that what they're on? Okay. They didn't like that, huh?
and he wants to move up again at the next meeting. He wants higher than 5.
Anybody killing it right now? Anybody just slaying the market? I need to feel like Cool's typing something.
No, you win some, you lose some.
Oh, did you give it back? Did you give back what you made?
Not all of it. Not all of it. I was at, actually, I made some. I was at 3.74%. I'm at 4.6 right now. Playing with a 0.01.
Oh. Take this off. That did not like that. Whatever that was.
She asked him when he's going to stop.
When he's gonna stop what? Talking?
No, about his inflation tools and stuff. Oh, you wrong for that, man. Maybe forget what I was doing.
Oh, we're getting some continuation in here. And the move. We'll take that break even right there, just because I was too far away and I didn't want it to go against me. So I just took a break even, made a little bit of money, like 20 pips on that, and just didn't play it right. I said, I'm waiting for a big move, and then it happened and didn't play it right. That's okay. As long as I get out break even. Good. Like you just have no idea where it's going. Let's take a little bitty bites.
I don't know. I've been trading super light. I'm up 0.5%.
Yeah, not too bad.
Oh, came back, huh?
Yeah.
Did you take back what the market stole?
Almost there.
Almost
I'm
there.
trying to steal it back from the market.
Let me know when he's done talking, if he's not, or because that'll kind of tell us when we should start seeing spreads come back to normal, all that kind of stuff.
and they'll have to remain high for a time.
He's still answering questions.
Howard Schneider with Reuters. Thanks for taking the question. You described.
I don't know. Can y'all hear that? Is it bothering us?
No,
Moderate or modest, I believe.
that's good. Let's keep it.
Yeah, it's
plain,
really
if you don't mind.
approaching stall speed. Half a percentage point is not much. You described labor market unemployment rate as representing some softening, but it's nearly a full percentage point rise, and that's well in excess of what has historically been associated with recession. Why wouldn't this be considered a recessionary projection by the Fed?
Well,
So this will send a
I'd say the
spike.
projection is, I don't think it would qualify as a recession, though, because we've got positive growth. The expectations in the S&P are basically, as you said, which is we've got growth at a modest level, which is to say about a half a percentage point. That's positive growth. It's slow growth. It's well below trend. It's not going to feel like a boom. It's going to feel like very slow growth, right? In that condition, labor market conditions are softening a bit. Unemployment does go up a bit. I would say that many analysts believe that the natural rate of unemployment is actually elevated at this moment. So it's not clear that those forecasts of inflation are really much above the natural rate of unemployment. We can never identify its location with great precision. But that 4.7% is still a strong labor market. If you look, you've got the reports we get from the field are that companies are very reluctant to lay people off, other than the tech companies, which is a story unto itself. Generally, companies will hold on to the workers they have because it's been very, very hard to hire. So, and you've got all these vacancies out there far in excess of the number of employed people. That doesn't sound like a labor market where a lot of people will need to be put out of work. So that there are channels through which the labor market can come back into balance with relatively modest increases in unemployment, we believe. None of that is guaranteed, but that is what their forecast reflects.
Thanks.
Nothing.
Chappelle, I want to follow up
There's
on
just a lot of squawking.
the decision to step down the pace of rate increase. Rate rises appears to have been socialized at your last meeting, largely before the past two CPI reports showed inflation decelerating in line with the committee's forecast this year.
I thought Doug was going to.
You just now talked about making decisions meeting by meeting and being mindful of the lags of policy. Does that mean all things equal, you would feel more comfortable probing where the terminal rate is by moving in 20 basis point increments, including beginning of your next meeting?
They like this question.
I haven't made a judgment on what size rate hike to make at the last meeting. But
Wonder if you're not real time. I wonder if you
right, which is
market's reacting to his answer and you're delayed.
So much restraint that's still in
It's live. It's right off of the Federal Reserve website.
And that will allow us to feel our way. And
All right, it's just a little harder to hear y'all. So if you want volume or anything, just text.
and better balance the risks that we face. So that's the idea. It makes a lot of sense, it seems to me, particularly if you do consider how far we've come. But again, I can't tell you today what the actual size of that will be. It will depend on a variety of factors, including the income data in particular, state of the economy, state of financial conditions. No, absolutely not. No, as a just a matter of practice, the S&P reflects any data that comes out during the meeting, and participants know that they have that they can make changes to their S&P.
Oh, that's a big spread.
Well in advance of the press conference, so that we're not running
Went all the way to 4 for some reason.
That's not the case. It's never the case that the SEPs don't reflect an important piece of data that came in on the first day of the meeting.
Ooh, I hit my goal.
Hi, Chappelle, Rachel Siegel from the Washington Post. Thank you for taking our questions. I'm wondering if you could talk about the projection for the unemployment rate. Why has the Fed raised its unemployment projection? Is it because the model suggests that a higher terminal rate would automatically cause a higher unemployment rate? Or are you seeing signs that the labor market isn't quite as strong as we think it is now?
No, it's not about the strength of the labor market. Labor is clearly very strong. It is more just that, by now, we continually expected to make faster progress on inflation than we have ultimately. And that's why the the peak rate for this year goes up between this meeting and the September meeting. You see that you see the fact that we've made less progress than expected on inflation. So that's why that goes up. And that's why unemployment goes up, because we're having to tighten policy more. And so it didn't go up by much in the media, I don't think, but that's the idea, is slower progress on inflation, tighter policy, probably higher rates. Probably
Good job, Bob. Hit your 1%.
Where you the kind of restriction that you need to get inflation down to 2%.
In order to get to that number, how much of that could be caused by layoffs versus vacancies trimming or changes to the labor force population?
It's very hard to say. You can look at history, right? And history would say that in a situation like this, the declines in unemployment would be more meaningful, I think, than what you see written down there. But why do we think that is the case? So I'll give you a few reasons. First, just is that there's this huge overhang of vacancies, meaning that vacancies can come down a fair amount, and we're hearing from many companies that they don't want to lay people off, so that they'll keep people because it's been so hard. And I think it feels like we have a structural labor shortage out there, where there are 4 million fewer people, a little more than 4 million, who are in the workforce available to work than there's demand for workforce. So the fact that there's a strong labor market, means that companies will hold on to workers, and it means that it may take longer, but it also means that the costs in unemployment may be less. Again, that we're going to find out empirically, but I think that's a reasonably possible outcome, and you do hear many labor economists believe that it is. So we'll see though.
Thank you, Colby Smith with the Financial Times. How should we interpret the higher core inflation forecast for 2023 in the SCP? Does that not then suggest that the policy rate currently forecasted for next year should actually be higher than the 5.1 median estimate penciled in?
Well, I think that's why one of the reasons it went up was that core came in stronger this year. Yeah, what you see is our best estimate as of today, for how high we need to raise rates, to how much we need to tighten policy to create enough, restrictive policy to slow economic activity and soften the labor market and bring inflation down through those channels. That is the estimate, best estimate we make today. And as I mentioned, we'll make another estimate for the next SEP, and we'll, of course, between meetings we'll do the same thing, but we might publish it.
Hi, Victoria Villa with Politico. I wanted to make sure I understand specifically what's going on in the SCP, because you all expect rates to go higher, but you're also more pessimistic about what inflation is going to look like next year. And I was just wondering, given that we have seen some cooling in inflation, is that primarily because of wage growth, that you expect wage growth to be sort of a headwind?
So we're going into next year with higher inflation than we thought, right? So we're actually moving down to the level that we're moving down to next year is still a very large drop in inflation from where inflation is running now, well more than a 1% change in inflation. But remember that the jump off point at the beginning of the year is higher. So we're moving down still by a very large chunk. I don't think the policies have any less effect. It's just starting from a higher level at the end of 2022. So we're getting down, I believe the median is 3.5%. That's a pretty significant drop in inflation. And where's it coming from? It's coming from the goods sector, clearly. By the middle of next year, we should begin to see lower inflation from the housing services sector. And then, the big question is how much will you see from the 55% of the index, which is the non-housing services sector. And, that's where you need to see, we believe you need to see a better balancing of supply and demand in the labor market. So that you have, it's not that we don't want wage increases. We want strong wage increases. We just want them to be at a level that's consistent with 2% inflation. Right now, that if you factor in productivity estimates, standard productivity estimates, wages are running, well above what would be consistent with 2% inflation.
Yeah. Thanks. Hi, Chappelle. Neil Irwin with Axios.
Some of your colleagues have been pretty explicit that they can't imagine rate cuts happening in 2023. That's certainly not implied by the SEP. But futures markets have priced in some easing in the back half of next year. What's your view of the likelihood of any kind of rate cuts next year? What circumstances might make that plausible?
You know, our focus right now is really on moving our policy stance to one that is restrictive enough to ensure a return of inflation to our 2% goal over time. It's not on rate cuts. And we think that we'll have to maintain a restrictive stance of policy for some time. Historical experience cautions strongly against prematurely loosening policy. I guess I would say it this way. I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way. So that's the test I'd articulate. And you're correct. There are not rate cuts in the SEP for 2023.
Steve Matthews with Bloomberg. Let me ask you about China. In the last few weeks, China has abandoned its COVID policy and been reopening pretty strongly. I'm wondering if you see that as disinflationary because you're seeing supply chains improve, or inflationary because it obviously brings a lot more demand globally, improves the global outlook for growth and for commodities prices.
So you're right. Those two things will offset each other. Weaker output in China will push down on commodity prices, but it could interfere with supply chains ultimately, and that could push inflation up. In the West, it's very hard to say, how those two will offset each other, and it doesn't seem likely actually that the overall net effect would be material on us. But to your point, China faces a very challenging situation in reopening, and we've seen waves of COVID all around the world can interfere with economic activity. China, a very critical manufacturing place for manufacturing and exporting. Their supply chain is very important, and China faces a reopening that they've backed away from their COVID restriction policies. That could be very significant increases in COVID, and we'll just have to see. It's a risky situation. But again, it doesn't seem like it's likely to have material overall effects on us.
Hi, Chris Rugaber, Associated Press. Thank you for taking my question. I wondered if you could comment a bit more about yesterday's inflation report. I mean, it showed inflation cooling in all three of the categories that you laid out at Brookings. Are you confident that you're seeing real progress on getting inflation under control? Are you still worried if we slip into some kind of unentrenched, upward spiral? Thank you.
Right. So the data that we've received so far for October and November, we don't have we have some remaining data to get in November, but they clearly do show a welcome reduction in the monthly pace of price increases. As I mentioned in my opening statement, it will take substantially more evidence to give confidence that inflation is on a sustained downward path. So the way we think about this is this. This report is very much in line with what we've been expecting and hoping for. And what it does is it provides greater confidence in our forecast of declining inflation. As I mentioned, we've been expecting significant movements in overall inflation and core inflation in the coming year. And this is the kind of reading that it will take to support that. So really, this gives us greater confidence in our forecast rather than at this point changing our forecast. In terms of the pieces, we have been expecting goods inflation to come down as supply chain pressures eased. That's happening now. Housing services, as I mentioned, there is good news in the pipeline. As long as new housing leases show declining inflation, that will show up in the measure around the middle of next year. So that should help. And the big piece, again, is core services and housing, which is very important. And we have a ways to go. We do see some beginning signs there, but ultimately that's the big, more than half, as I mentioned, of PCE core index. And it's very fundamentally about the labor market and wages. If you look at wages, look at the average hourly earnings number we got with the last payrolls report, you don't really see much progress in terms of average hourly earnings coming down. Now there may be composition effects and other effects in that, so we don't put too much wait on any one report. These things can be volatile month to month. But we'll be looking for wages moving, down to more normal levels where workers are doing well and ultimately their gains are not being eaten up by inflation.
Excuse me, Michael McKee from Bloomberg Radio and Television. There's a little bit of a disconnect between the optimistic view you just expressed about the economy and the changes that you've made in the SEP. And I'm wondering if you're reacting to the fact that the markets have loosened financial conditions, or if you feel the Fed may be a little bit behind on inflation, whether in the recent disinflation we're seeing is transitory or not, and how this affects the idea of a soft landing if you're projecting just 0.5% growth for this year.
So if I think I got your question. So, one thing is to say is I think our policies end up getting into a pretty good place now. We're restrictive, and I think we're getting close to that level of sufficient. We think sufficiently restrictive. We laid out today what our best estimates are to get there. It boils down to how long do we think this process is going to take? And of course, we welcome these better inflation reports for the last 2 months. They're very welcome, but I think we're realistic about the broader project. So that's all. That's the point I would make. It's we see goods prices coming down. We understand what will happen with housing services, but the big story will really be the rest of it, and there's not much progress there, and that's going to take some time. I think my view and my colleagues' view is that this will take some time. We'll have to hold policy at a restrictive level for a sustained period, so that two good monthly reports are very welcome. Of course, they're very welcome, but we need to be honest with ourselves that there's inflation. 12-month core inflation is 6% CPI. That's 3 times our 2% target. Now, it's good to see progress, but let's just understand we have a long ways to go to get back to price stability. No, I wouldn't say that. No, I don't say that. I mean, I would say this, to the extent we need to keep rates higher and keep them there for longer, and inflation, moves up higher and higher, that narrows the runway. But lower inflation rates, if they persist in time, could certainly make it more possible. So I don't think anyone knows whether we're going to have a recession or not, and if we do, whether it's going to be a deep one or not. It's not knowable, and certainly, lower inflation reports, were they to continue for a period of time, would increase the likelihood of a. So I would put it this way: of a return to price stability that involves significantly less of an increase in unemployment than would be expected given the historical record.
Hi, Chairman Powell. Brian Shaw, NBC.
Man, this is going on. I think I might just be done though.
Earlier this year, as the Fed hikes rates, but with the Fed, I expect.
Do what?
One more pop. I think I might be done trading here.
Yeah, you hit 10%, dude.
I know, in like 2 days in a row. I don't think like I was saying, I don't think that's happened. I don't remember the last time it happened. I wasn't tracking it. So I've had killer days where I've hit 20 and like more than 10%, but I don't think I've done back-to-back 10s. But I think I'm going to be done trading because I got some work I got to get to. But I mean, that was good. It was a lot of ups and downs, and if you were on the wrong side of some trades, it allowed you to recover. If you sold right here, and you're still holding on to sells, get out.
It's pretty calm for an FOMC.
It was pretty easy to navigate. I mean, generally, a lot of times you get a lot of this action right here, and then just up and down action, right? Of like 30, 40 pips. And yeah, but I think we played it pretty good. I was in and out. Sometimes I would put 3 take profits on. Sometimes I wouldn't put a take profit on. Anytime I saw a big move, this I did not play very good right here, this move, because I had some cells here, and then I had some here, or worse, and then it popped up and I put some here. And so I had to wait for it to come down to here, and I basically broke even where I could have, if I didn't have these on or these on, could have played it for more profit. But looked for break even first always, because I'm glad I got out before it did that thing, right? So took some profit some places, gave some profit back to the market, and that's trading. There's give and take, and as long as you take more than you give, then we're all Grinches for Christmas. Anybody else have any thoughts on this? Nick says he basically wobbled light in the middle until the big pop went my way. Good job, Nick. What'd you end up at, Nick? Just curious. Joseph, nice for FOMC. Yeah, any pretty tame. Yep. 2.2. Yeah, boy. That's awesome. Cool. Are you positive?
Yeah, I'm at 4.2.
What? That's crazy. That's awesome.
Yeah, but I'm on a losing one right here. 5 losing trades. We'll see how it goes. Probably wind up at 4.
I'm like, yeah, 5.2, but my unrealized is 10%.
How y'all doing these big numbers? I hit 0.91.
What position size in the account were you trading?
8,500, 0.05.
Ah, man.
Maybe
okay, I 4.18. That's where I'm at. I hope it makes you feel better, Josh.
The only thing I would say is maybe you're just not putting enough positions on, right? So
Well, but I didn't want to get upside down and hit that 5%.
Sounds to me like you're trading scared.
Yes, that is exactly what that is. There's no illusion.
So looking for opportunities, you could have smacked like me. I smacked a ton in right here, right?
I think 8 was as heavy as I got, and it was right there.
Let's see here. Back. So as you can see, taking losses, taking wins. Just I was kind of, taking the 8 pip, 3 pip wins, taking losses. Let me see here. Get confused sometimes where the GMT time is 7:50 p.m., but we're at 20 on the clock. So that's weird.
Okay. I better do some work.
Yep.
Have a good one, guys.
See you, Coolio.
Take care.
I'm kind
Well, the wings now.
What's that, Robin? Were you saying something, Robin?
Looks like we're on a right away situation right now.
Sure. I'm good though. For me, I'm done trading. I have traded a ton today. So, but I think I think I started like 8, so something. So maybe 1.5% off that, 2% maybe somewhere in there. But I think we're done. I think I'm gonna actually go get some work done today. So thanks, guys. We'll see you in the morning.